Welcome to TradeTheNBI.com. This is John. This report is for the 3rd of March. And, well, the start of the war trade, we had the big gap down. We headed right towards that 0%. Didn't quite reach the zero. We got close, though. 67, 68. We needed to get down to 51. Pretty darn near it, satisfying your uh, MBI white spike from back over here. It just took a while. We were up and down, and it's that sideways action that we were predicting. Of course, everything was turning out to be nice and rosy. And as we got towards the end, Trump mentioned that, oh no, by the way, it's going to take 4 more weeks of war, and then the increase of the Iranian bomb counters on oil facilities, blah, 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 yada, yada. And yeah, we're seeing the effects of it, particularly in the European session right now, because they're the ones who's going to suffer. It's not going to be the U.S. because all these other countries are going to get pulled into it. You're going to end up with the U.S. supplying weapons to all of them and also all the oil. Since the Strait of Hormuz will be blocked, and all out of European countries as well as elsewhere in the world are going to be limited. Ironically, it actually helps the Russians tangentially with their oil, blah, 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 blah. Still no change here. You got a deeper move of the magenta below yellow. We were continuing decline under the 25 range for, well, the last 3 or 4 days here. And it was a pretty strong rejection here of the spider when we had cyan move above green on the DOC standpoint, and you have your rising orange there. It's dipping back down again. If that continues, then you would end up with some stability potentially at the 0% again. The NQ, a bit stronger even, made it all the way up to the 38% on the return, but it had been much clearer from a short signal earlier on when it reached that 50% mode, and pretty much identical from a DOC view with the split, and you can see the rollover. The likelihood now is that you're going to be watching for a higher shakeout pivot upward on lower lows or matching lows. Previous lows were, right in this range. So we've already matched the lows on a higher reading, but you got to have obviously an improvement in the histogram. We don't have that yet. And they sold off the oil, but then realized, oh my, yeah, a little too early to be that optimistic. What they hope to get now, I mean, you're just going to continue bombing what infrastructure stuff. They already have their leadership shifts, and they're continuing to bomb other areas. So I don't know how effective all that's going to be. Disaster zone for the euro, though. I mean, this is just crippling for them because LNG price is going to more than double. So you're going to be buying all this stuff in U.S. dollars. A protracted event, well, obviously it's clear because you're going to have limited ability of Europeans to get trade goods, blah, 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 blah. And it was all a fake narrative anyway because the euro should never have been where it was. So they've got room to play with. Can you imagine if this had happened when you're at a, 110 or less, you'd be subpar to the dollar, which is where it should be anyway, given the differences in economic growth relative to each other. So this isn't going to have the dampering growth effect that you're going to see from EU standpoint because certainly far closer to it. And you even have bombs in Cyprus. So are those drones going to go further? Can they make it to Italy or some Greece? We don't know. We'll see. Do they get Turkey involved? These are all the unknowns that people start to worry about. You didn't get much of a move from gold, but this is just going to be a steady play. It's not really going to be impacted so much from that. You're likely to see more volatility out of Bitcoin in that, but still look at this. Until you get to close above the 23%, it's not even worth talking about. Just plain and simple. Intraday was pretty clean. So here you had your gap down from below, continued a little bit, filled out all the stops, but as soon as that happened, magenta got back above MBI white there, battled a little bit more, but then it was right here. It was pretty clean that magenta had the lead and was strong in that case, and that just started forcing the short cover rally. Not only did you go from negative 100 to green, um, at that particular point, people started taking the gains on that massive return from it. Did have the MBI weight spike that took place here, but that wasn't a sell until you reached this pivot point right here. It held up for just a couple of bars, and yeah, then it started to cascade lower. Um, we're still with magenta below the red line, so that's not done yet. So you still got to hit the 0%. So anything higher than the 0% on that is a divergence, which would be rather bullish. It was even cleaner from the 5K tick chart. So you had the sell from Friday that led into the beginning Monday. We had a nice brief little pop there that flipped around, and boom, you can see that nice move on to the lower lows, and then we ended up with a nice DOC with the orange dip below, and boom, went to green. And they talk about it being choppy. I wouldn't call this choppy. I mean, you had up, across, up. This one did a double up and then across, and then you had a little bit more of the standard back and forth action as you continue to make new highs each time. So uh, I thought it was all pretty clean. It was all fairly orderly. No big surprises. Fantastic volatility. But as you can see, this wasn't hard to follow. Even the later selling going into it, and then here we have post market. Yeah, ugly. That shouldn't even be because that's where I'm working on these. Without a close above the 23%, that's still red. But you have enough of a pop that you've got your opportunity with the MBI white lead. You're just waiting for the pivot of magenta, and you're going back to the 0+, and that's exactly where we're at now. Oh, quite nice. Now this isn't going to end, and we're probably going to see some stronger moves now as opposed to the sideways trading because this kind of blows up a lot of the models, and it certainly destroys the whole energy narrative of growth. So yeah, that's going to be a problem for inflation. So we'll see unless they're able to do something spectacular to produce X number of millions more barrels, despite the fact that these facilities are being bombed. That oil price is just going to kill consumer prices. So everyone's going to be paying for it around the world, not just in the U.S., but globally. And that's just one of the consequences. So there you have it. That's long and the short of it. We'll just keep continuing to follow the readings and laugh because it's really kind of straightforward from a reading standpoint. Unfortunate that it takes conflict to create these kind of strong directional moves, but this is pretty clean. Anyway, I'll put anything relevant on the team chat. Have a good one. Trade well.